Hi, this is Randy Finney with Right Side of the Chart. This is an early session update for Friday, February 21st, 2020. Wanted to actually, what I'm going to do here is just go through. I think I'll just stick with the charts that I covered in this morning's charts I'm watching today. Now, so before I start this video, it is a bit redundant, but I like to do the videos because I can, give a few extra talking points and some things on there. Time permitting, maybe I'll roll into a couple other trade ideas that I didn't mention, but sometimes I find it best to just focus on, a few things. It's almost like when you're trading, it's like trying to hold sand or water in your hands. You hold too much, it's just going to slip through your fingers. And that's the same with trade ideas. So the other thing I wanted to mention is a lot of these are somewhat or more so directly interrelated to each other. In other words, if the stock market, if we get these sell signals and we get that downside move that I'm looking for on NQ, that's most likely going to, give a tailwind, help out the precious metal trades. I mentioned they are looking a little gold, especially looking a little heavy. It's had a nice run up, silver. So I'm going to get to those charts, and again, just kind of share these talking points because, yeah, in other words, a way to look at it is here. Let me just start with this chart. Here's the first chart on that post this morning. And what I wanted to say, if everything that I went through in that post, you're not interested in trading, I know those were futures, and that's what I can do in this video too, is go over the charts of the index ETFs for those of you that don't trade futures. It's just easier. This morning I'm watching the futures. I can see what's going on there before the market open. I know that video didn't get out, or that post, I'm sorry, until right after the market opened, but I started, screenshotting these charts before the market opened. So the point I'm trying to make here is that, let's say NQ holds support, or let's say it breaks down, we get another one of many bear traps, false sell signals, and the market ramps up and does this. What will that do? Well, crude will probably go up. I already, I'll get to that in a second. I gave you my thoughts on crude. Gold and silver and platinum will probably drop. Bitcoin will probably continue to fall because it recently had a sell signal. So in other words, you have these risk off assets over here, gold, silver. I didn't hit on it today, but I have recently treasury bonds, Bitcoin. They tend to rally when the stock market is going down, and they tend to fall when the stock market is going up. So I wanted to share that point and let you know that all this stuff in one way or another is usually interrelated, and so you need to factor that in. And then the takeaway is, if you're completely positioned, let's just say you are short the markets and you're long the precious metals right now, that is somewhat of a concentrate. You are diversified. I speak often of the benefits of asset allocation diversification, but it is to an extent a one-sided trade. In other words, you're either going to be right on the drop in the market, in which case you'll be right on your precious metals, or you're wrong and then you're going to be wrong on both. Now, that's not an absolute. I'm trying to do this without doublespeak, because there are times where asset classes that are inversely correlated, like treasury bonds or gold, as well, with the stock market, there are times that they can both rally or they both drop. So I just want to kind of throw that out there, but I'm speaking generally for the most part. If you're bullish on gold, you're probably going to do well when the market's falling, and vice versa. Okay. All right, so let's go. We'll just walk through these in the order I covered them. Here's the charts. I had that line, I had it colored yellow this morning. I had to manually color it after I screenshotted it, so I'm going to put it back yellow on that chart I just showed you a minute ago. Taken before the market opened, it was a yellow line, and meaning it's significant, at least near-term levels, and that's been taken out. So there it is. There's your sell signal on the NASDAQ 100 right there, and boom, right down to our next support level / target as defined by that. Because we had a breakdown, because it's impulsive, I favor a continued move down here. That is the sell signal I was looking for. And remember, it also takes the form of, if you get rid of all the lines on this chart, I can't turn these off like I can on TC2000. TC2000 has a nice little toggle feature to turn all your drawings off. I can't do it on this program here. But what you have here is a ascending triangle pattern there. I'm sorry, ascending broadening wedge pattern there, megaphone pattern, and boom, there's your breakdown. So you're at support. The way it works is, this is, buyers are likely to step in here, the dip buyers. If I was, thought the market was going to turn up from here and take another leg up, I might be buying here, but I'd prefer to wait and see a breakdown there, and because I still think we're going lower. That's sell signal. And again, my convictions, because the stock market's been so resilient, I still don't think it's time to be aggressively short the equity markets. You can it's certainly objective. You can certainly have a position, and that's just one of them. But I like to spread my bets around. That's why I'm doing this video. I'm going to cover the other things, but so I still see more downside, whether we have a reaction here or not. The reaction can be defined as a consolidation or a pause on that level or a bounce, and then I'll move down here. So let's go to the next one. Okay, no reason to toggle back and forth to every chart again, because that's on the home page. If you're getting this as a subscriber, if you got the email notification on this post that this video is out, then you've already received the one on the front page with these static charts. So we were right here this morning, and I said, ES was right there on the line, testing that 33.53 support with the sell signal coming a break of it. That's what you want to see. I talk often about, impulsive selling. I talk about a 60-minute close below. Check, check, check. Yesterday, I believe I mentioned that we already had a run down towards that. My first or next target there, 33.37, came close enough, and so therefore I said, and if I didn't, I'll say it now. I don't favor much of a reaction. In other words, the odds now go down substantially. The way I trade and the way I list multiple targets is the initial tag of each one is likely to produce a response. So being that we kissed it yesterday or close enough, I favor very little, if any, reaction, and we go on down through there. That's how it works, since that level has already been checked once. So that's what I see on the equity markets, and we'll go to the rest of the stuff here, because if that plays out, then hopefully some of this other stuff will as well. I said I'd stick with those things, but I will throw this out because I threw out Netflix as a short trade idea yesterday, unofficial, and so far so good. This is the 60-minute chart. You probably already saw that post. I call this the golden shorting line. We've had numerous, both official trades. That these were both official. We shorted it there. We waited patiently. I like that one. We had an earnings report there, and the market didn't like what it see. It went down, and I was watching this bearish rising wedge back then, tracking it, but I wanted to wait till earnings were out of the way so we didn't get burned on the wrong side of a gap. It went down too much. It wasn't objective. I don't like to chase. Those that chase got burned because we kicked back. But once we kicked back to that level, boom, that's where we entered the short, and we ran it down to wherever it was that those targets are gone. Then we did it again here, official trade, and took it all the way down here. Wash, rinse, repeat kind of stuff. Got out. I actually even posted it, or I remember going long on that one, and maybe posted. I don't know if it was an official long. And that's swing trading for you guys. That's what, this is the difference of investing. An investor in Netflix, you guys are probably thinking, wow, one of the best performing stocks in the market in a long time. Well, guess what? If you've owned Netflix for the last 2 years, you've gone absolutely nowhere. In fact, we're right here now where we were. You can see, this is almost 2 years ago, right there. So here's a stock in a big, choppy, potential topping pattern. I think the market knows it too, that Netflix was first to the gate with streaming content, and now there's a lot of competition in that field. I have a Netflix. I haven't had it for years. I would cancel it if it wasn't for my kids who like the shows, but personally I can't ever find anything to watch. But that's just me. I think their content is. Anyways, let's not get off on a tangent. That's it. Take it if you like it. Don't take it if you don't like it. It's unofficial. The market's still in a strong uptrend. It could certainly break out, and I think a lot will depend on what the market does, because Netflix is a component of the NASDAQ 100. So here's that 60-minute chart. So far so good. One thing I want to share on this real quick. I know this is digressing a bit, but somebody asked under that post, hey, are puts a good idea? I'll just share, you don't see calls and puts, you don't see options as trade ideas on the site. I have a lot of experience with them. I used to be a stockbroker in my former career. I've traded many options over the years. I don't like them. I over on balance, I don't do well on options. And the reason is, I say this often, where my skill sets lie, I do a pretty good job of determining where a stock is going based on a technical chart pattern, based on the charts. But and sometimes I'm pretty close to, right on, when it might get there. However, sometimes I'm quite often correct on where the stock is going. It just that's one thing I say, that's hard enough to predict where a stock is going to go. In other words, Netflix is at a multi-month high right here, maybe even a yearly high. To say it's going to go down to this 360 level, but it brings in a whole nother magnitude of difficulty to say exactly when it will get there. Now this is a 60-minute chart. I think if I'm going to be right, it'll probably happen relatively soon. But when I go out to longer term swing trades, if I have a long-term target, again, quite often I might be right on the where it's going to go, but it may take a longer time, much longer to get there. And the thing is, of course, with options, unlike if I'm right on the call, if the stock trades around, let's just say, for example, let's just say that I shorted Netflix right here, or right here even, close to that at the golden shorting line, and although it did go down, let's say I was holding out for this target. So what happened is it went down, it popped back up. This was months later. You look down here at the scaling, and then eventually it got down here. Now, initially, I might have thought that it might get here. So if I bought a put option that would expire, somewhere, outside that point, guess what? It would have expired here and expired worthless if I had bought it out of the money. And so that's the thing, guys. And there's a lot of other variables to the trading options, but again, I like the shares because I can quantify my loss. It's easier to get stopped. There's liquidity in those. Trade what you want. I know a lot of you guys do trade puts and calls. Over the years, I've heard a lot of people, and they use the analysis that I provide to help supplement their own, where a stock might be heading, what to trade, and then they go in, and I can tell you, if you really get into this stuff, read up on it. There's paired options trades, which are much more conservative than buying raw puts and calls. Typically, the smart money, i.e. institutions, they sell options, and no offense, because I'm in this group, the dumb money or retail traders, they buy options, puts and calls. And smart money does that, and a majority of puts and calls expire worthless. And so, if you want to trade options, I would encourage you to read up, learn everything you can about them, because there are a lot of variables. Even with Netflix, if you bought a put yesterday, you have to look, what's the premium? What are the premiums like? I've seen stocks where the premiums on a put or call are so high that you might get the call right, and I've looked at them, and I might, my call was where it was going was correct, but guess what? I didn't buy that put or call because I would have had to not only be correct on my call, in other words, where the stock was going, up or down, let's say 10-20%, but I would have had to make an extra 10 or 20% just to make up for that premium on that option. So you need to be aware of that kind of stuff, that you might buy a put or call, and then you realize the stock's dropping, it's going the way your trade was supposed to, but yet you're not making any money. What's going on here? And that's again because maybe you paid an inflated premium. Option sellers are not stupid. They know which stocks have the potential to fall or rise sharply, and they will often, that is going to be priced into the option. So enough on that. Just try to pass along things that I've learned over the years, and hopefully it'll help you. And if you're a new trader or investor, I can think of no faster path to ruin than trading using excessive amounts of leverage, and that's what options are. They're extremely leveraged, 100 to 1. Each contract represents 100 shares of the underlying. Futures are heavily leveraged as well. So just you have to learn to walk before you can run. Don't start out, if you're new to trading, don't start with options. That's I can't give specific individual or specific investment advice, but generically I can, and I could say that that's usually not a good thing to do. Okay, moving on to the next one. Okay, in that post this morning we covered that. We covered ES right there, and the next one up I had was crude oil. Yeah, let's talk crude. Crude. Oh, this has been a nice one lately. I've been able to play this one like a grand piano. We had this 52.46 resistance level. We broke out. Boom. There was an objective long entry. We were already long crude, by the way, back here after the breakout of the rising wedge. Had this, and USO was the official proxy, but we got out of that within pennies, averted this big give back. Somebody under that post yesterday said they shorted it. I said I shorted it too, and this is where it was going. So I covered and reversed for a quick bounce today, but I'm out. I don't want to play a big bounce. Why? Because of the equity markets breaking down. But that 52.50 was just a golden level, as you can see right here. If I can get it in, we have to zoom in a little tight. always say, I had the line at 52.46, but I keep referring to that as 52.50. We had some highs there, and so you want to cover a little bit above. So there it is. We had a decent bounce, a tradable bounce off the lows today. Boom, that was about a 1.5% bounce. If you trade CL, that'll put probably, I don't know, $1,000 in your pocket right there. It's per contract because of the leverage factor, so it's pretty decent. However, so that's it. All I'm going to say is right now, taking a step back. I gained a little bounce, on the long side after covering the short, but out, and I'm going to sit tight for now. Normally, maybe if the stock market holds support, I might go back in there. Why? Because again, that's a really nice support level. So far, everything, the case that I made for even a longer term rally in crude is firming up. We defended that long-term support. I'm not showing it here, but it's in the recent analysis, and we've been moving up. We're in an uptrend right now, and most importantly, we're coming off very oversold levels at key support. Here's your uptrend right there. Uptrend in a stock or a security, in this case a commodity, is defined as the security making a series of lower highs and higher highs. That's it. It's that simple. Now we haven't done this one yet, but so there's a very good possibility, and I would put it as even a much better possibility that we have now another leg up to maybe the top of that resistance zone around 55, if the stock market can hold these next support levels. We had those sell signals, and I told you, take them for what they are, but also take them with a little bit of a grain of salt, because this has been the trend lately. There's a voracious bid. Dip buyers are stepping in. Shorts are they're henpecked. They're covering on the early levels lately because the market refuses to drop, and so therefore, again, I'm doing this video because this can go either way. The market goes up, crude will probably have a nice another leg up if the market can, especially like I said, if these sell signals we got today prove to be whipsaw signals. If we get back above those support levels that were broken by a fair amount and the market rallies up, goes on to make another high, crude should do well. Otherwise, if the market drops, remember, crude oil and the stock market are normally highly correlated based on economic growth expectations. So if 52.46 or 52.50 goes, you have trendline support right there, and that's certainly and I almost favor that right now. Let me just tell you, this is probably the most likely scenario. Why? Because it would burn, it would clear out stops that are under 52.50 for those that stepped in there to punch down through there, run the stops, hit this trend line, and then reverse. So you can trade it as you want. Now, if that trend line breaks, 52.50 breaks, and the trend line, that's not good. And if the market takes a sharp leg down anytime soon, that is likely to be the case. I just wanted to say, please don't interpret this as double speak. Things could go either way, and I have to acknowledge that. So, sometimes I have strong convictions on where something goes. I just think we're at a critical inflection point, or technical juncture, I should say, on crude and the stock market. So, like I said, if you're going to trade it, be nimble. There's money, I think, to be made here. You just, if it goes one way, you think it's going to go one way, and it goes another, you have to adapt. Don't go long here and hold crude to, if it takes out these recent lows, because anything is possible. That's one thing I've learned over the years. Any security that you think cannot become more oversold or more overbought or can't go any higher, it can. Just keep that in mind. Okay, next up was coffee. All right, coffee again ran up here. This one been bullish on recently. We had a breakout, nice divergent low, positive divergence, everything you like to see. This is the chart on the homepage this morning. I'll zoom in a little bit there. Let's take a little breakout. Well, breakout number one. First of all, we held this support. Breakout number one, then a breakout above this horizontal price resistance level at 101.45 plus downtrend line support. Nice, boom, been walking its way up. Had a strong leg up, hit that 111, we'll call it 112 resistance level with a brief momentum fueled overshoot, pulled back in, and I believe in advance I had highlighted, if we come back down here, we have support at both 105.62 as well as uptrend line support. So boom, hit that. That's an objective long entry, re-entry if you took profits here, and this could be the catalyst. I suspect it will for the next leg up to that next target there, about 116.15. So that was then. That was again screenshotted in pre-market right before the market opened today. Let's see where we're at now. Let's do an update on KC. That's it. Boom. Nice leg up off that level so far. That is a, what is that, run of about from where we hit at the lows, about almost 6% right there. So if we continue on up, which I suspect we will, and why? Because, well, a couple things for everything I just said. We had, this was bullish here, a lot of developments recently, but you can see we have an explosive, impulsive move off here. That's what you want to see coming off a pullback to support. So anyways, that's where we're at, and if you took it down there or anywhere close to it, just it has really no business getting below. So stop a little bit below that will keep you from losing a lot if it takes another leg down, because if it does break that, it's probably going to run at these old lows, and who knows, it could easily take those out as well. So as of now, looks good. Let's just leave it at that. Yeah, I meant to do this for you guys. I know a lot of you don't trade futures, and I'm sorry about that. I should cover, did I cover on the well, the indexes I'll get to in a second. Joe, okay, these were the levels that I had marked on the 60-minute chart recently. So there was that was a comparable rally up to the level I just showed you on KC. On Joe, the ETF or ETN for coffee, 35.51. We already hit it, pull back. Again, the futures are going to paint a more clear picture because they're trading not around the clock. Coffee is a little quirky. It shuts down every afternoon. I think it's like 2:30 or something. It's shut down for a while, and then it picks up, starts trading, and overnight, and kind of weird hours. It's not the nearly 24/7 like the equity futures, but it trades a good part of the day, and so that's it. So Joe, next target there, 36.75. I think that should roughly align with that target I just gave you on KC for you Joe trader. Same, there's your trend line too, and stop below those recent lows, and that trend line should protect you, especially if you recycled back in here, or if you were in long back here after the breakout. And it's not shown here, but you got a similar downtrend line on coffee. Okay, and next up we had Bitcoin, BRR. These are Bitcoin futures. And so there's a story. Well, let's just go to the live chart here. No reason. That's the one I posted this morning. Let's just see what happens since then. Okay, holding up so far. Let me make sure that's up to date. Yes, it is. At that resistance level. And here's the story. The story is we've been in a nice uptrend. We caught a good part of that uptrend with our official trade on GBTC. Then we broke down here, kicked back tested, impulsive rejection on the back test, fell to this 92.64 level. I had that laid out in advance, hit that, bounced back to resistance. So that's it. So now this is, we have started a near-term downtrend. We're making these lower highs so far, lower lows, and we broke down after putting in, we didn't just break trend line support, we had negative divergence at that high. So now I have mixed feelings on this one because Bitcoin tends to, not always, but usually it'll work as a flight to safety instrument. So if we get a stock market correction, Bitcoin could rally up. Maybe this is it. Maybe this is it for the correction on the breakdown here. I don't have strong convictions. So I just wanted to share the levels to watch. In other words, if we break much above 97.80, that should open the door up to that next resistance level there, and then we could go on to make new highs. That will most likely coincide with the market taking another leg down. But if the market holds up here and shrugs off these recent support breaks we had today, Bitcoin could go down. The next sell signal would come. You could short it here. It's objective to short, or go long on a break above. You either short at resistance, 97.80, give or take. We're at 97.95, but close enough to that line, with a stop somewhat above to short for a move down there. And because we've already hit that level once, you would probably hold out for a move down to that next level. Or if you think the correction's over, go long on a solid break above that level, impulsive break, and again above this level here. Like I said, I'm standing aside that for now myself. Okay, and close that one out. Go to the next one here, and we have GC Gold. Let's go to the live chart of gold. Like I said, gold gold's looking pretty heavy, meaning it's had a sharp run. It's gone nearly parabolic right here. You got to be careful with these parabolic advances. Hate to chase them when you go this is a parabolic run. There's a parabolic shoot up. Those spikes up. They tend to be followed by pretty sharp corrections. Gold's also approaching this, extreme overbought reading right here, about 84. We're not exactly there yet, but close enough. You get overbought, and that's usually where either corrections come in, either a sharp down, or sometimes you hit it and you don't correct in price, but you correct in time. You go sideways for a while. So what I'm getting at, the risk reward is not great. However, I don't care to short gold, and it could continue up if the markets break down and take another impulsive leg down today, or let's say Monday, because gold is one of the king of flight to safety instruments. So therefore, like I said, probably wouldn't be chasing it here. I pointed out the breakout recently right here before it happened, that this a break above 1580 would be, buy signal. It broke out, back tested, and it's had a very nice run since then. It's up about 5% or so on gold futures. Little minor trend line to watch. If we get a pullback, if it does correct, then here's a potential trend line that comes into play, and another potential trend line. I say potential because there's only a few reactions. This one has a few more, and then probably and should at this point give you one more horizontal support level in case we get a pullback. But so far, again, this helps support the longer term bullish case. So I remain longer term and even intermediate term bullish on gold. I think it's, if you're not an active trader, forget about all this 60-minute stuff. This recent breakout here, break above the new highs, opens the door for my longer term targets. I'm not going to get into that now. I just wanted to focus on the near term outlook here. And then I covered silver and platinum. Let's get to those live charts there. Start out with silver. If I can find it down here in the futures. There we go. All right, so what you need to watch for, what I'm watching for on silver, we had the breakout here. Silver has had a nice run. Like I said, that was one of my, preferred silver over gold for percentage gains since the breakout, and I believe it gave us that. We've had it's close actually, about a 5.3% rally since that breakout recently. And so here's what I'm watching. It's pretty simple. It was laid out in those charts this morning. This is a potential small, 60-minute rising wedge, aka bearish rising wedge pattern, because you have the negative divergences confirming it. So a break below that. And again, that will most likely coincide with the markets regaining those support levels they broke down today. And that would likely take us down to this trend line right here. So if we get a break there, we could drop back here. It would represent a drop depending on when it broke down, but from where we're at now, not too much, about 1, and of course it depends on when it gets there, 1.5% or so, give or take. But again, if we go higher and then break down, that's a bigger drop. If the market breaks down, takes another leg down today and or Monday, we can continue on up. These are just divergences. They are not sell signals. These lines can be moved. Maybe this morphs into a price channel. Maybe we just burn through this line. Again, a potential pattern. A bearish rising wedge, like any other pattern, is a potentially bearish pattern, but it's not a sell signal. An only sell signal comes when you get a break down below the pattern, especially in a impulsive break and or 60-minute close. If that trend line doesn't catch as support, then you have a decent support there about that 18,138 level. And the next one I covered was platinum. Platinum the other day I mentioned had pulled back here to the 978-ish and uptrend line support level, offering an objective long entry, and it did. We bounced right up to that first resistance / target at 987.65. Hit it several times, couldn't get through it, failed, and pulled back. So we're bouncing. That's it. So here's where we're at. The trend line's been chopped through a little bit, so it's not as valid anymore. But what I'm focused on right now, we have a trading range, and because silver is volatile, you get these little spikes. Those are the skinny part, or we call them the candlestick shadows. You can call it a wick when it's above the candle, or a tail down below. And so really what's important, look at these, where do most of the candlestick bodies close, and they're all in that range between those levels that I'd given before. So this is it. Market takes another leg down, we probably do this, and then maybe this. If the market rallies from here, holds support, rallies today, print a solid green close today, recoup all these losses so far, and then follow up on Monday, you'll probably see this. I favor this, so that's where we're at now because I favor more downside in the markets. Okay, and next up, sugar. Sugar, I used the daily chart there because that's really was the primary basis. I didn't. It's not an official short, but I know a couple on the site shorted it, and I just said, look, it's here's the thing. We had resistance right here, long-term resistance. It's a daily chart, and we already had a pullback, and I said that may have been it for the pullback. We rallied, overbought into resistance. You're likely to get at least a reaction. That is a reaction so far, a pullback and/or so far some consolidation. We failed to take it out. We could still fall down below that level. Again, my convictions aren't high enough to add this as an official trade. This is in a bull market, bull trend. There's an uptrend line. If it breaks that, I'm leaning this way, but I'm not, sold on it. There's some support there. Let me give you that target in case we get another leg down. I don't want to spend too much time on it, but I did want to give you guys an update. So, and that's pretty much what we already hit. So we already hit that pullback target once. And, if we break down, that's a level to watch. If we break the trend line, then this is for support. It's already been hit once. We may break it and get a deeper correction. And if you want to, if you're short sugar futures, I shorted them. I still have a short trade on them. I didn't take profits there. Believe I'm still in that one. I have to look at that account, but I still think there's a good chance we get there. And here's the thing: if you pop the highs, you pop them with conviction, then that's a breakout, and that's where you want to have your stop a little bit above there. And I told you I'd cover SGG for you ETF, ETN traders, and that's it. There's your comparable trend line. That was your comparable target, which again was already hit once. I'm going to move that line right about that reaction low. So right about, we'll call it 47. So here's the thing. Breakout above, especially the recent highs, bullish. As long as we remain up this trend line, another break here, you would have a second sell signal if we break 47 because we've already hit it once, and that would probably take us down here. That's not a hard support level, but it's roughly right there around 45.17. So again, not one of my favorites, but just wanted to do an update there. Okay, and then this one, I added a new trade idea that I hadn't mentioned recently, the Euro, and I actually updated this chart. And you see down below, remember, I'll always, check back if you like anything you see in a post. If I see anything additional, something I missed, follow up. And it gave you price targets here. I told you at the time I just wanted to get that one out, price targets to be determined. And this is E7 for you futures traders. And what I did too is I hadn't, the line wasn't on there. There was a falling wedge, so I added that downtrend line there. Beautiful little bullish falling wedge pattern. Euro is extremely oversold right now, meaning the euro is the biggest component of the US dollar index. Another way to trade this, if you don't want to trade the euro, short the dollar. You can use UDN. The euro is 57.5%, I believe it is, of the US dollar index. That is by far the largest component. The yen is a distant second at well under, I think it's 30 something percent, and then everything else hardly even moves a needle on the US dollar index. So trading the euro is basically an inverse bet on the dollar. So when this rallies, what this means is euro up if I'm right, dollar down. This is another reason I wouldn't short gold. If this happens, if I'm correct here, and we go up and hit any of these targets, that's going to mean the dollar is falling, which is bullish for gold. So gold could continue higher from here, and especially if this plays out. Let's look at the updated chart. Oh, and before I leave that one, I had also, close that one out, FXE. There's targets. I consider that in as official trade. Again, read the notes down in the post below. There's your targets for FXE. Let me close this out and get to that that post. I made some comments here too about trading currencies. When you trade them, if you're a forex trader, I don't need to tell you this. You need to leverage. Currencies move. Forex traders trading pairs, direct currencies. They move in very small increments. You're not going to have a 10% rally in the dollar in one day, or the euro. So you need to leverage up. Now, if you buy E7 euro futures, I can tell you it is they're leveraged up. They are. Let me see here. About about 72,000, 73,000 per contract is what it represents if you take a contract of E7. So do the math on whatever move. 1% move on E7 is going to be 1% of 73,000. Now, you can trade FXE. It's not going to have that leverage factor, and I'll show you what I was talking about here about leveraging up. So we go to FXE if that's your, if you want to take a trade on this. I posted a 60-minute chart. And so from where we're at now, if we hit that first target, the actual resistance line's at 103.40, you're talking about a 6.63% move. If it goes up here to that second target, 1.27. So therefore, you can use a stop down here, and you can then leverage up, take a 2-3 time position. There might be, I don't know if there's a leveraged ETN. The currencies are usually ETNs, not ETFs. Just an FYI, it's almost the same thing, but you're going to get they kick out a K9 or not a K9, a K1 for your taxes. So that's it. Take it if you like it, pass if you don't. But I see a very, very oversold, a potential short covering rally. The euro has just gotten pummeled against the dollar, and again, that should be bullish for gold. Look at that big green reversal stick so far. So there it is. You can see on the daily chart of euro US dollar. That's the pair, the currency pair, forex pair. What do I see? What stands out, and why I'm just for the time being, I'm probably going to let this one run up to at least that second target I showed you on E7. I have a low level potential crossover, bullish crossover pending on, and I think we'll get it on the PPO extreme. This is the most oversold we've been going back since right here. That was the last time we were this oversold was right here. Yeah, we were in a bear market back then as well, but let me just show you how much we rallied. And that from that reading, this pop here was about a 3%, almost 3%, 2.75% rally in the euro, and we went on to put in a divergent low then, and then had an even bigger rally. So, again, you get a rally like that if you're a forex trader. That's a nice trade, very nice trade. And here's what I'm eyeing right here on the chart of the euro US dollar pair up at about that 1.09920 level right there. I think we can go up there. I think we're going to see a pretty good short squeeze. I think that's what's going on here and why we're seeing this impulsive buying so far. Okay, that is it. Video went long, but I covered a lot of things. Again, those are some of the things I'm watching, not all inclusive, but hopefully there's some trade ideas for just about anybody in here. We have currencies, precious metals, commodities, crude oil, equity markets, even an individual stock or two. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.